Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders, and we've got David Grandy and Harlan Palin from All About Trends. How are you gentlemen this morning?
Doing just great.
You betcha.
All right. You enjoying this market volatility?
Yes, it's
Yeah, I think we're working on our I think we're working on our fourth consecutive triple-digit move in the Dow.
Yeah, it's absolutely amazing the last couple of days. I mean, this is not this lack of order is definitely not very much for confidence building, and but hey, what can you say?
You know what else is interesting about it? Sometimes I'll watch CNBC with the volume off.
Yeah.
And sometimes you see the little headlines. Dow up the best day since 2013.
Yeah.
And people kind of go, oh wow, that's kind of neat. I just look at that and I go, yeah, well, last week it was Dow having worst day since 2013. So what's the difference?
Yeah, no, it's
so just don't pay attention to those headlines. Pay attention to what the charts are telling you.
It's absolutely amazing.
Because that's noise. That's just noise when they do that.
And so I figure I want to share a really quick story with my friends online and your friends online. Yesterday, my wife and I decided, after the market was closed, my wife and I decided we were going to go out and grab a bite for lunch. And I posted this on my Facebook account last night. And this is me at the restaurant. And I'm pointing towards this gray object on my right shoulder. And what happened was, as I was getting dressed to get ready to go out, I had pulled some socks out of the drawer, but the cat started bothering me because she wanted a treat. So I basically went and got the cat a treat, and then went back to look for my socks to find out where I put them so I could put them on. And I looked everywhere, high, low, in the dirty clothes, could not find the socks that I was going to put on. So I eventually went over to the dresser and picked out a new pair of socks, put those on, finished getting dressed, put my shoes on, and took off for and then went downstairs with my wife, and she goes, "Did you find your socks?" And I go, "No." She goes, "Oh, I see you found your socks." But I said, "No, I didn't find my socks, but I got some out of the dresser." And so we get to the restaurant, walk into drive all the way down, about 15-minute drive, and walk into the restaurant. And I actually am seated in this really nice restaurant in downtown Pleasanton. And my wife finally looks at me and goes, "Oh, look on your right shoulder." And so here are the socks that I had put aside, sitting on my right shoulder. And so I carried those all the way downtown into the restaurant, the whole 9 yards, and it was absolutely hilarious. My wife laughed so hard she was crying and bawling. So, and it wasn't. Anyway, it was a crazy story, and I bet the waitress was going, "Wow, that guy is strange." But I'm just glad it wasn't my plaid boxer shorts. So if any of you can relate with that story, good. Anyway, I want to remind everybody that today the materials that we present are for training purposes only. Traders should paper trade any new method prior to risk of personal capital. I really love getting emails from folks who are, in fact, paper trading and just really experimenting with the system to see how it works and all that kind of stuff. That is absolutely phenomenal. Today's going to be kind of a quick day for us, but just a reminder that David and I really love to talk about stocks, trading stocks, and if you have a group, no matter where it's at in the United States, we will be glad to, if we can't come in person, we can tie in via webinar. And we've got this great presentation called The Art of Trading, Art of Trend Trading, that really goes into some of the nuts and bolts and provides insight into what we're trading currently. So if you have a group and would like to see this presentation or have us chat with you, please let us know. If you're in the Bay Area, we of course can go to wherever you are to do the presentation. I want to remind everybody that thanks to the hard work David's done and his work with the Money Show in the past, we will be doing the Art of Trend Trading at the World Money Show in Orlando between the 5th and the 7th of February 2015. It's going to be at this cool place, the Gaylord Palms Resort. I'm not that familiar with Orlando, but if you have friends or know somebody in Orlando, please let them know that we're going to be there. We would love to meet them and chat with them. David, you excited about this trip?
I am very excited, and it's always nice to go to Florida in February. So,
It is. It is. So let's get into the market review. Basically, last week, when we were reporting, I was over in Hawaii at the time, we reported a deeper into correction. We slipped last week, but we found a place to bounce. Now what? S&P in our report last week, so the S&P has been damaged, NASDAQ's been damaged, but the Russell was finding some support, and it looked like it was going to lead on the way back. Well, this week, what do we get? Straight up from the bottom. So that tells us what the now what is. But typically the straight up out of the bottom type patterns are not healthy patterns. We find today as we're doing this show, S&P is at resistance. NASDAQ has made a powerful move, and when I pop open the chart, we'll see if it's still above the 50-day moving average. But the Russell move is slowing, and it may go back into being definitely the lagger of the indices that we track. Outside influences. We were talking a little bit before we went live about how talking heads and the news just has been driving this market just crazy of late. And so what do we have going on? What are the outside influences and confluences working in the market? Is earnings, Ebola, cover-ups, ISAs, fill in the blank kind of things. And it seems like anything that is of, I won't even say newsworthy, but that it actually makes the news, seems here lately to be pushing the market either up or down, and we're still getting these big wide swings in the market. So got a couple of emails, guys, this past week. They're saying, hey, this market has been really challenging to trade. And I have to agree with them because the setups that we're getting are short, fast, and sometimes you don't even see them because of the lack of order that's in the market. Do you guys agree?
Yeah.
Yeah.
I do see it. It's blink your eye. It opens at X, and within 2 milliseconds, it's at Y.
Exactly. And
yeah, it's definitely a market to, only the best. We say that all the time. Only the best setups, forget the rest, and it's just even more important in this current market.
Yeah. And so here's one of my favorite charts, indicators. And the time we spent down here below the 25, I think, is indicative of the internal strength of the market. This was the first time in a few years where this particular indicator spent so much time down here in the oversold condition. This is the percentage of stocks on the NYSE above their 20-day moving average. And as you can see, we spent close to 3 weeks down here. We finally get the breakout. Started around the 15. Got a nice little positive divergence as we were hitting the new lows. But that kind of thing is really hard to see. We finally get our pop, and sure enough, we've run up 6 of the last 7 days. And even today, as of midday, we're sitting at 67.51. And that is definitely a race out of the bottom where we've gone from 25% of the stocks being above their 20 all the way up to 70 in just a few days, which is a little bit of there's probably, that is not a sustainable type move, but it may be a building type move. We shall see. Let's go look at the charts. Here's our buddy Tesla. Let's take a look at the SPX. Got a daily chart on the left, a weekly chart on the right. Sure enough, this move, and I want to just call it to people's attention, this move from the absolute low on the 15th to today's high was 7.81% in a matter of 8 trading days. I know that it's been my experience that when you get that type of a move that quick, that there tends to be a pullback, definitely a retest. And right now, the only little retest we had was this day here after that rebound, which was Monday. You get a little, I'm sorry, which was Wednesday. You get this pullback. We thought we were going right back into the same type of big down days followed by big up days. But at least we did push a little bit higher in the S&P, all the way back up to the 100-day moving average, the upsloping trend line that has been busted. The Worden brothers who do the TC2000 charting program, they talk about this particular move a lot, where you break hard down through an existing long-time trend line, and then price action tends to take it right back up to that trend line, and then they call it kissing the trend line goodbye. So are we looking for a kiss goodbye? And if it can't get back to through that resistance level, we may get a retreat. But will a retreat be to the 8-day moving average coming up, or this, well, it looks to be that the 20-day is trying to roll back up. So we'll have to wait and see what the price action does. But clearly we have hit a level of resistance here on the S&P. And looks like it might be time for a little bit of retreat. The NASDAQ. The NASDAQ is, okay. It busted above the, well, I won't say busted because it makes it sound like a real powerful move, but clearly this has been a powerful move from the low on the 15th up to today's high. You're looking at 9% in the same amount of time. Harlan and Dave, what has been your experience with this type of a move so suddenly straight up off the bottom?
They typically either track sideways through time to digest that. That would be extremely strong. Or they'll pull back. When I look at this chart, what bothers me is you got that big gap down there. Keep in mind the NASDAQ 100, 3 names are huge drivers, with Apple and Google being really big drivers of the index. Facebook is 3%.
Yeah.
So, and then Microsoft is in there too. So, they can run the names that make up the biggest percentages of the indexes because our markets are so dominated by the ETFs and your big funds that are swinging back and forth, just the index names. So it tends to amplify things.
Yeah.
But, the gap bothers me because more often than not they get filled. The question is it going to get filled right away, or will it go the route of we'll come back and look at it down the road 2-3 months?
Yeah.
We don't know.
So, yeah, one of the things
what we do know is we're extremely extended in the short term, and that's what
we
matters.
certainly are. And it'll be interesting to see how the NASDAQ does finish off the day. Does it maintain its busting above the 50-day moving average, or do we start to slide back down? Remember that once you get above a moving average or above a previous resistance zone, that zone then becomes new support. You have a reversal of roles. And so with that, this, about 4,000 is a support zone now. But if that's busted, look, the next level of support is all the way down here at the 3950 level. And by that time, you're going to get, close to the other moving averages. And so you're getting a confluence of potential support right here. And so I wouldn't be surprised to see this basically go ahead and roll back over and pull down to, approximately in this area to see if it's going to bounce back up. The thing to remember, though, is since this is not a new high, this is not a higher high, because you need to be taking out this level, the 450 level, to start looking at a higher high on this particular move up. and we have not put in a a higher low either. We went from this big swing low down here to this particular current move. That's all one fell swoop, and so we do not have the constructive pattern like you'd see in a situation like over here, where you run up, pull back, and then go higher. Right now we're just kind of trying to push to go higher. The 450, 4050 level is another strong level of support, and like I said, we'll see if we close above the 50. If we do not close above the 50, I would say that would increase the probability of a more pronounced down pullback, or retest, as a lot of people would call it. Let's see here what the Russell has to say. Okay, Russell, same type of thing. It looked like it was really starting to pick up here. A couple of positives on the Russell that I do like is we do have the 8 crossing above the 20, which is good. We have run into a level of resistance, though, right here at the 1120 level. And so if we get a follow through that comes back down here to the 1107 level prior to the end of the day, or more than halfway down this candle, that would be considered a dark cloud cover, which is a bearish reversal signal. And so we'll have to, again, we'll just have to wait and see what the market provides us. If we get a dark cloud cover, that would give us an indication that we're probably going to at least try to return to some of the stronger support down in this area. Is it a trade? Again, with the Russell, we did have a little bit of a rally up here. You could kind of consider this that it has busted above a previous swing high, which would have been a lower high over here at the 1110 level. But if that's not maintained, as you can see, we've got that resistance zone in there. What are we looking at on the weekly chart? Same type of thing. You see the bounce up, but we are right to a resistance level, and we'll see where we finish the day. We'll see if we get any. We'll see if we can get any what this retracement is going to do. So basically, that's what I've got, guys, on the market. As you can see, I think we're all waiting for the same thing. We've come straight up off the bottom on all 3 indices, and now we are waiting for either that sideways move before proceeding up, or a little bit of a pullback into a stronger level of support for a potential move up. If you look at something like TNA, which I'll look at that a little bit later on in the stock review, this pullback here could be a tradable pullback, because the Russell is still the weakest of the indices. So any other questions on the market review, folks? Okay, David, I'm going to swap over to you.
Sounds good.
And folks, I'm going to mute myself here shortly, but if you have any questions, folks, now's the time to be asking them. And then please hold your stock request until we're a little bit closer to the end. Go, Dave.
Okay, yeah, that was great, Dennis. And yeah, I'm pretty much going to sound like a broken record here, because it's all about what to do with this pullback here. Is we have clearly made a huge move in a very short time frame, like 350 points or so on the NASDAQ in 7 trading sessions or so is not the type of market that we'd like to buy into. So now that we have this big move off the lows, let's see what kind of pullback we get here at resistance. And like Harlan was saying, the best ways that the market can pull back and show us that it's time to step up on the long side is through a sideways consolidation, or even a pullback via price, as long as it's orderly and on light volume, and not the not anything like what we saw for the past 2 weeks or so, where we had big sell-offs. So that's what we're looking for. We have a lot of great setups on our long side, and they just need a little bit more time. They really could benefit from this pullback, either sideways or down, and that will set up a great opportunity for us to really go heavy on the long side. And that's what I would encourage you guys to do. Just, we have to, okay, the market is now on a new uptrend, right? But we're not just going to go out and buy stocks hand over fist without any regard to the indexes. And we have to pay attention to where the indexes are, and our trading plan is we just don't chase stocks. We let them come to us, and so we're seeing a great setup here. We just need to get that pullback, and we'll be set. In the meantime, though, we do have a lot of short sell setups as well on our watch list that we can benefit from should the market find resistance here and pull back. And I'm going to go through what that setup looks like. So there's something for everybody still. It's a market of stocks. It's okay to be long and short at the same time. And we're just we're at a point where the indexes are at resistance, and we need a pullback, and we have opportunities to profit from that pullback should that occur. So as you can see, straight up off the bottom, up here to resistance at the red line in the 50-day moving average. It's a very logical place for us to find some resistance. And for those of you that are in the bull camp, the best thing that could happen here is a pullback sideways or a little bit to the downside, and then a burst higher above this resistance level in the 50-day moving average. And when you see that, to me, that's a much better confirmation of a new rally than buying it here on day 4 when you've already made a big move in the indexes and you're closer to resistance. So that would be the best thing that could happen for those of you that are on the bull side of the market. Same thing with the S&P, rocket off the bottom up to resistance at the 50-day here. So it's all about that pullback. It really is. So in the market, 3 things you need to know. We talk about every week: uptrends and how to trade them, downtrends and how to trade them, and change in trend patterns. And we're seeing a change in trend pattern right now, perhaps with the indexes, where we have this big move off the bottom, and we can call this the first thrust up, and then we need that pullback and then a move higher. That's really the confirmation. It's important to see the big move up and then the consolidation, make a higher low, and then blast above resistance. That is the ideal change in trend pattern when you're looking at changing trends from down to back to up, and that's what we need to see. On the downtrend side, we definitely have a lot of stocks that have broken through resistance levels and have rallied back up now, like the indexes, into resistance, and could be in a position to break through to the downside again should the market pull back. So this is what the pattern looks like. So I just talked about a first thrust up and a pullback off highs being the ideal scenario for a change in trend pattern from down to up. Well, the opposite is true when you have a stock that is now changing its trend from down or from up to down. So here we have in this blue box what we call a first thrust down, a big violent move to the downside, crashing through resistance, and then a rally back up to resistance, and then it breaks down to the downside. And we have scores of stocks that have formed these patterns and could definitely break through. So if you want to see these patterns, it's really easy. We have a 15-day free trial. Just go to our website and sign up for the trial. There's no credit card or anything needed, and you'll get instant access to all the wonderful setups we have on both the long side and the short side. And so right now we're just really need to see that pullback and then a move higher to confirm that it's really time to go hog wild on the long side. In the meantime, we've got all kinds of great short sell setups that we can take some quick trades on and make some nice profits. And but it still is a time to take it easy. The markets are extremely volatile. I mean, I think if the Dow was getting close to a 100-point gain, but it's backing off a little bit now. So if that had happened, that would have been our 4th consecutive triple-digit move in the Dow. So it's definitely a crazy market, but there is a lot of order to it on both the long side and the short sell side, and we're excited about what we see, and we just have to remain patient and wait for these things to trigger. And that's the beauty of the system. It brings us in, and it takes us out, and we just do what the charts tell us to do, and that's it. So that's all I have, Dennis.
Thanks, David. I'm just finishing up with one little note, and I'll be right back. Sideways. Yeah. So thanks for your questions, folks. There you go. Let's get back over here. And David, thanks a lot. You know, it's so interesting that, you know, we watch a lot of the same type of stuff, and we have different triggers that get us in and out of trades and all that kind of stuff. But the philosophy of the trend trading systems, the all about trends, the active trend trading, it is basically about that. You find that trend and you try to carve out, like, you know, half to 2/3 of the moving up. If you can get more than that, that's great. But it's almost like we're trying to leave the pieces of meat that would be used for just, you know, like ground round, because we're trying to go for the fillet or the prime rib, you know, where you're trying to cut just out that portion in the middle. And to do that, you got to wait till you can actually see the trend. And if you can't see the trend, the best advice in the world is just stand aside. Stand aside. Let's go over here. Yeah, I want to show everybody, okay, we've added a little bit to our profits for the month of October. We started kind of in the hole for the month of October. Hope to be able to add to that going into next week. We're about 6.5% invested with a position in AMBA currently. Margin accounts up 26.7. The IRA is up 49 for the year. And we're hitting what the system tells us should be our parameters. We are hitting within those parameters. I need about 13% to hit the 40% on the margin account, and the IRA has already surpassed that. And for anybody who's new and join us, this margin account was used at the beginning of the year, and we started our timing service in June, and this margin account was used at the beginning of the year to do some testing on some other type of things. But as soon as we converted it over to the active trend trading system, where that's all it trades, we were up about 9 to 10%, and since June we've gained about 16, almost 17%. And this recent, the market over the last couple of months has been really challenging because we've had a lot. Have you guys been whipsawed a lot with your profit and loss statement a little bit over the last few months, David?
Not too much, actually. You know, we saw this coming. We stayed in cash, a very high position in cash.
Yeah.
And I think, you know, for the bulk of the year, gosh, David, rarely have we gotten over, 35% invested?
Yeah. And so, yeah, and you guys are almost flat the market right now, correct?
Yes.
Yep. And as you can see, I'm 6.5% invested, so I am basically flat the market also, which means that I am almost all in cash. Here's a trade that I want to just basically throw out there for folks if you are an option trader. One thing that I've noticed, and this is not a recommendation, this is just a trade that I'm doing based on yeah, let me answer Joe's question. The returns that Joe are calculated, and they are on my website, and all the trades are posted there, and that's what they're balanced. The actual purchase price and sales are something else. Now it's basically actual purchase and sell price on all of it, the winners and the losers. So anyway, Tesla is going into a pre-earning period. One thing I've noticed on Tesla is that during when it goes into the pre-earning about a week and a half out, the implied volatility of the option string that covers that week when the earnings are going to be, reported, just spikes dramatically. Normally the volatility, implied volatility on Tesla hits about somewhere between 50 to 60% on a regular basis. But going into earnings, that week of earnings when when that option, the options that are going to expire the week of earnings, they ramp up volatility huge. And so what this is basically a pre-earnings strangle type trade. I'm going in very small, and this is a trade that is based on the volatility spiking up to somewhere to 150 to 170%. In the past, the day of earnings, the volatility on these options would spike to anywhere from 150 to 200%. And on some of them, the weekly option are going to expire the very next day. So we're trading the volatility spike, and what I'm going to do is I'm going to buy one contract, one put contract, one call contract that expire the week of 11/7/14. This is a speculative trade and must, and I reiterate, and must be closed prior to the end of the day on November 4th, which is the day of earnings. Because if you don't, if a person doesn't close this trade, then volatility crunch takes over, and all that wonderful 160+% volatility, it just evaporates right after the next day when earnings have already come out. So here's what I'm doing. I'm trading this position. I'm buying the Tesla weekly option. I'm buying the put, the 215 put, plus I'm buying the 250 call for a net debit of around $10. So I have about $1,000 invested in this trade. If volatility does as expected, and it's currently sitting at about 65.66, and if on the day of earnings it is at 165 or over the volatility, this strangle will be worth approximately, based on a theoretical price model, about $19. And so we'll just take that off the table, and then whatever happens with Tesla is fine over earnings, but we're just playing this as a pure volatility play. And again, this is not a recommendation to make this trade, but I want to highlight it in case you are interested in options. You can definitely do a paper trade on this. And I have put this trade on today, and so the debit is somewhere sitting between $9.50 and $10. And again, I must reiterate, it has to be closed prior to the end of the day on November 4th. And we covered this last week. I really appreciate the emails that are coming in. The active trend trading motto is clarify, simplify, multiply. We provide a system that's for, I designed it basically for busy traders who are still working for a living, so that you can trade just a handful of stocks, but have the timing such that you'll know when to get in and when to get out, and it doesn't drive you nuts trying to track a huge watch list. There's some of the things we provide with the service. Here's a little bit more of what we provide with both the premium and the basic service. And you can go to the Market Tech Talk YouTube channel, and if you want to review this through the week. And I want to thank you guys for going to that YouTube channel. Both David and I love it when you give us a thumbs up, and also give us, and just say, make some kind of comment. Hopefully positive comments are always appreciated. So, David, that's all I have for today.
Okay, Dennis, I think that was really great, and I'm looking forward to hearing some questions from folks.
Okay, well, folks, I want to remind everybody, have a great weekend. This is the last weekend in October, and keep growing the egg. I can't overemphasize that enough. And sometimes, based on market condition, you have to grow that egg very slowly. And as usual, trade wisely and profitably. And with that, I'm going to shut down the recording and we'll get into